This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Getting closer to the end of the week. It's a Thursday morning. We're coming to you as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel and Rima is here with us over the next 2.5 hours. Guys, hi, good morning.
Hi, morning.
Hi, good morning. After yesterday's drubbing, looks like today is going to be a bit soft to begin with.
Drubbing and super drubbing.
Super drubbing. Let's hope India, provides that comfort with its match against Bangladesh
Yeah,
today.
let's hope we're going to come out on top. I have no doubt about my boys. No surprises when we play.
I like it, my boys.
my boys are coming out on top for sure.
Mere ladke.
I couldn't make it to the 15th, so
All right, well, let's just kick it off with what you need to know as we sort of begin this morning. So it's a classic risk-off overnight. The reason I say it's a classic risk-off because yields went up, the dollar was up, oil was up, equities were lower. And it's a mix of things, right? I mean, it's geopolitics, which has been festering at the margin. It's not as if there's something big which has happened overnight. There was some Fed speak, there was this and that, but overall it was down and out. So let's just begin with the bond market because that is where bulk of the ugly price action actually shone through. The 2-year broke above the September highs at 5.18%. We ended actually at about 5.22. And now we are basically, I mean, if you just look chartically, eyeing the 2006 highs at 5.27. There is no sign of exhaustion or anything. The 10-year went up, the yield went up 7 basis points, and we left off at about 4.91. So these are large moves, and even the 30-year, for example, is now back above 5%. So this is the structure that we are looking at and have to deal with. The dollar got pulled up as well, about 0.25%, 0.3% higher. 106.56 is where the dollar index left off at. You've got the equity market, which sold off. The S&P was down about 1.3. The Nasdaq was down 1.6. And the Russell 2000, the small cap index, was down over 2% as well. So again, these are substantial cuts. There were some earnings as well, and I just want to pick up one, which is Tesla, because, as I called it 2 years ago, talismanic Tesla, right? I mean, that is basically the torchbearer for a lot of retail sentiment in the US. It missed Q3 earnings expectations across basically most operational matrices, and the numbers came through post-close, and the stock, I think the last I checked in after hours, was down about 5% or so. Oil prices, it's going in the opposite direction, opposite in the wrong direction, 1.6% higher, over 91. Iran is now calling for an oil embargo on Israel. And as I said, that geopolitics and the fallout, etc., is uncertain. So conviction remains extremely low one way or the other. There was some Fed speak as well. So 2 governors who spoke, well, they said that perhaps we need a higher neutral rate. But there were others, actually one who said not really entirely agree with that. But in any case, I think, we will hear from the Fed chair himself. That is later today. Which way he leans, I think, will be important in that sense, in that context. And that may be actually a big one because we started with the bond market, yields rising, etc. If he very definitively says that he doesn't see the risk for a higher neutral rate and what we've done is okay, and market interest rates rising so much means that we don't have to do very much, we may actually see a big reaction when we come back tomorrow morning on yields. Let's just tie this into what levels look like. So the Nifty yesterday closed just a tad below the 20-day moving average. So that stands at 19,673. We left off 2 points under it, 19,671. That will go as we start this morning. So the support then for the Nifty comes in at the 40-day exponential moving average, which comes in at 19,648. Yesterday at the low point, we kind of were not quite there, but 20, 30 points off it. So we'll see. The lower support beyond the 40-day exponential comes in around the 19,498 kind of levels, 19,500, round number there. So we'll see how things open up. The Nifty Bank was the weaker of the 2 indices. Once again, it lost a full 1% plus. It broke the 43,900 levels around which the markets found support. And I would say the August low is back in play. We toyed with that 43,600 levels for so many weeks when we were back there. I think that comes back into clear view once again. with the kind of cues that we're being handed from global markets, etc. The gift nifty will come up on your screen. I mean, I think this is largely, I would say, a no-trade day. You could look to buy the dips, but then you'd have to be very nimble and quick enough to get out and not really wait to find out by 3:30 what the close is going to look like. So that could work, but I would say, I mean, better to just stay out and let this kind of resolve itself, because we've been in this 19,650, 19,850 range for a long time, and we are now again testing the lower end of that bound. Rima.
Hi, just a quick word on Asia this morning. Firmly lower. You've got cuts of more than 1.5% on the Japanese index, more than close to 1.7% gone on the Hang Seng. The Korean markets are reeling with cuts of close to about 1.5%. So Asia is firmly lower. Earnings are picking up steam. So today the Indian markets will react to the 4 nifty companies, all 4 of them, Bajaj Auto, Wipro, LTI Mindtree and IndusInd Bank, reported numbers post-market hours. So today that reaction will play out. Today is going to be a big FMCG day. 3 heavyweights, HUL, ITC, Nestle, all 3 of them report numbers. And another nifty company is Ultratech Cement reporting numbers. And on the mid-cap end of trade, Havells, Emphasis, PVR, Inox, Tata Communication, UBL, Voltas. These are some of the F&O mid-cap companies where you typically see a lot of action surrounding earnings. Today is also the Nifty weekly expiry. It's a Thursday, so you've got the Nifty weekly expiry. And finally, as Prashant said, the big Q will be post-market hours at 9:30 p.m. India time, when Fed Chair Jerome Powell will speak and perhaps provide some direction, some way to gauge the way the U.S. yields have been rising.
Rima, since we're gripped with the Cricket World Cup, today's scenario for the Bulls is they need to chase 350 to 400 runs. It's been done before, but the odds are against them doing it. Because that's the way the cues are stacked up. So global cues are against the bulls. You have the Nifty Bank as well that's under pressure. The bears will be feeling very, very good. The big question is, does the Nifty Bank want to correct a little bit more, go to the 200 EMA, which is closer on 2% away from current levels? So that's going to be the vital factor. And if you look at the heavyweights, well, you'll want one of those heavyweights to put their hand up and get counted, whether it's the HDFC Bank stock or Reliance Industries or both of them together. You want them to, hold one end up, because otherwise it's going to be difficult to hide for the bulls. The Nifty Bank is under pressure. The IT earnings as well have been a little bit weakish. So it's difficult to hide. So that's why you want HDFC Bank and Reliance Industries to outperform. HDFC Bank actually has been getting sold into any kind of bounces as well. And just take a look at yesterday. The Nifty Bank ended at the low point of the day, but that's because it played out weekly expiry as well. So that could be a factor at play. There was shorting on the Nifty Bank. Well, yesterday you had the Nifty Bank that ended lower with a cut of 500 points. And the open interest was up closer around 28%. So shorting being seen out there. And that perfectly fits in with what the FIs did in the F&O markets. Because they added 15,000 shorts for 7,000 longs. In the ratio of 2 shorts for every 1 long position. The net short positions on the index itself are closer around 71%. Bulk of the shorting yesterday was done on the Nifty Bank. Now the PCR, that's a crucial technical indicator. When it goes around 0.67, 0.7, we see the Nifty see a bit of a bounce. Now it's got some distance to go from there, though it's come down to around 0.8 odd. Why is that? Because call writing has been very, very aggressive. Now take a look at the highest open interest on the call side. That's nearly around 1.6 crore shares. While on the put side, it's less than a crore shares. So the difference between the highest call and the highest put open interest is nearly around 70 lakh odd. That's what's giving you the kind of confidence on the bearish perspective. They are feeling very, very good. They're writing calls very aggressively. Which brings us to the level. Since the 19,600 put has the highest open interest and the premiums around 21 rupees, you'll want the Nifty to defend, the lower end on a closing basis. That's around 19,000, close to 19,580 approximately. On the upside, the 20 and the 50 DMA, that's going to be important. The 200 DMA is very, very weak. So very far away from current levels. So on a closing basis, you want the Nifty to defend 19,580. And the Nifty is facing resistance at high levels, the 19,850 level. Just take a look at last 6 sessions. 4 times we have gone close to those levels, and we have seen selling from there as well. The Nifty Bank, well, that's been weak, and that's right in the middle of the 20 as well as the 200 DMA. Let's pull up actually the Nifty. The last few days, it's been going to 19,850 and seeing selling. Those intraday highs should come up for you. And from there, we have been seeing some selling. The Nifty Bank, pat in the middle of 2 crucial levels. Let's see which way it's going to swing. But the odds are against the bulls today. Let's see if we see an intraday recovery and that lasts, because there are likely to be those intraday pops. So it's going to be a trader's market. But as I said earlier, the bulls will be feeding on the back foot.
I like that cricket analogy, Nigel. So
it's been done before.
It's been done before, but it's tough. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show today. We'll get you updates from markets across the globe. Dean Kim of William O'Neill will be getting us the global perspective in just a bit from now. Our research team will get you the CNBC TV18's list of 10 stocks for the day. And at 8:30, we do a fundamental stock check. Deepan Mehta of Elixir Equities joins us for that.
On to equities then. Jonathan Garner of Morgan Stanley says MSCI EM, that's emerging market equities, have fallen 10% since the 28th of July, retracing half of their gains from October of 2022. He sees the market at a crucial juncture given the still negative earnings revision exacerbated by the USD strength and a challenge to the valuation from rising geopolitical risks and the 10-year US real yields retesting their post-2007 highs. He says they reduce beta but increase their overweight stance on Indian equities as their most preferred emerging market.
Okay, well, let's get you some money market views. Parul Mittal Sinha of Standard Chartered Bank says the USD INR continues to trade range bound. She says the impact of the dollar strength, higher oil prices and risk aversion was contained by probable RBI intervention to help smoothen volatility. She expects the USD INR to trade between 83.1 to 83.4 to the dollar next week with focus on forwards maturity of $5 billion. That's next week.
On the bonds, Parul says India rates are moving in a very narrow range amid geopolitical tensions in the West Asia and fear of a potential OMO sale announcement. She says flows from offshore investors due to index inclusion have been muted so far. Rates as an asset class is not in favor at the moment. She expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.4% in the near term.
Well, we've got plenty of stocks that we're going to be focusing on, so let's get straight to our special Top 10 segment, which we'll be addressing in greater detail in just a bit. We're looking at Bajaj Auto, LTI Mindtree, IndusInd Bank, Coforge, Persistent Systems, ICICI Lombard and Astral. Nearly 7 stocks are likely to react to positive news flow, while on the flip side, you have Wipro, Bandhan Bank and Dabur that could be opening up in the red.